Good morning and happy birthday, Hacks, for the sixth year um, of actually awesomeness. Or some people might think it's not so awesome because price is currently pretty much down. For the sixth birthday, I prepared something that I wanted to tell for a long time. It is the swaying theory of hacks. And the swaying theory of hacks, I think, is something that if you understand, you will learn something crucial about hacks, about cryptocurrency, and economics. It is something that I wanted to do for a long time. I thought to write a paper on that, but I thought the quickest way is actually to make a video. And the swaying theory of hacks is kind of explaining why prices move either up or either down. So let's get into it because there's a lot to unpack while there are many things that are happening right now. And what I have to tell you and show you is first some data. So let's get into the data. People know about my hex data and how comprehensive it is. It is the best place to consume and understand hex right here with me. So subscribe, follow me on Twitter. It's Ben Sierra Pro. And there is my YouTube channel, which is also Ben Sierra Pro. Ben Sierra Pro. So I will update you on hex data for a long time. So follow me for that. And this chart is one of the most crucial charts. And many people already know it because I came up with it. And that chart kind of explains the swaying theory of hex and makes you understand of where we are right now and where we're heading and how price will develop. So let me present to you this chart. All right, cool. What is this chart? It is a yearly chart about hex's staking flows, net flows, and there is a price chart. So you see the bar chart is the netto flow of staking in dollar value. And you see the orange line, which is the combined hex price of hex on Ethereum and hex on Pulse chain. Hex at one point got a second version when Pulse chain was forked, if you didn't know. And they are closely tied together with liquidity. So what we want to see is the combined price, and we want to see the combined flow into staking and out of staking. So that's why everything is combined here. One affects the other. We saw it on so many other charts. What you can see here is that the blue charts are aggregated on a yearly basis. We will look at it on a monthly basis or even a weekly, or we can look at it a daily basis. But I thought to start off is yearly a good overview. And we have already 6 years. 7 if you count 2019 into it, which was 1 month. And what you can see is that we have two positives here. And then we have 1, 2, 3, 4, 5 negative flows. And these are dollar values. So in 2019, we had 4.4 million of dollar value going into hex staking netto. So some was coming out, some was going in, most went in. And the dollar value is based on the price, obviously. And then in 2020, we had 46 million in netto positively going in. And by the way, it is kind of hard to calculate all of these metrics because don't want to get into it now, but there's a DOA address, and you have to count out all of those things because he's not really participating in buying and selling. So that's why you want to see all the other addresses and how they actually behave. For the people who know all of these things, it's just a small remark so that we really look at the users and the users staking net flow. And what you can see is in you have these two positives, and when there's a positive net staking flow, it's followed up with a price increase. So we had a positive flow in 2019. We had a positive combined HEX price appreciation. And then we had a very good year of net of the staking flow. And then all of a sudden you get the peak in 2021. And then in 2021, the net flow is getting negative, and it's pretty huge in 2021. So, and then the price is dropping towards the next year. And then you have another big bar of negative outflow of staking, followed by another decline in price. So then you have, another negative flow. It's getting smaller, and boom, you have another, price drop. And in 2024, negative again. 2025, negative net flow. So if my theory, which I explain in a little bit more, is right, then due to the negative flow, we should see a price decline in HEX combined price for the next year. And you cannot do everything exactly on a yearly basis. We can look also onto a quarterly view. But interestingly, the bigger the blue bar, the steeper the price decline is. So for example, here we had $800 million flowing out of staking in netto, and the price declined by 35% in average. And then you had 850 million, so even more, which was then followed by an even more bigger decline, which is 62%. And all of a sudden, in 2023, you have a 600 million net flow out of it. There, and then what you can see in 2024, well, the price decline is smaller. It's only 50%. And all of a sudden, we have only 61 million. So the price decline after 2024 and 2025 is only 28%. So it's interesting that the size of the negative flow in net is telling you of how much the price will increase and decrease. So that also goes hand in hand with my theory. So because we have a bigger net flow out of HEX this year, we might see a bigger drop next year than 28%, unfortunately, if my theory is right. So when we look, just let's look at the different kind of versions with looking at a quarter, looking it on a monthly basis. So let me move myself a little bit higher. So here you can see it on a quarterly basis. So there are, as you can see, very positive here at the beginning. And then just in Q3, we really, in 2021, we see the biggest positive net inflow, followed by Q4, the biggest net outflow. which then really started the bear market in HEX. And yeah, I mean, then since then it always got better. It got always better, and like there was even in in Q1 2024 a pretty good like inflow. So that was looking very promising. I think that's also when I came up with the chart and I had all the data and was able to kind of like compress all this information into this chart. And it looked quite good. But then what happened is that the net outflows just continued and even increased. I mean, over the board, it's getting better. It's getting better. Which means at one point we might see a flip in these net flows. And that flip, that resurgent, I think, will come just by the HEX's design. But for now, it's looking negative. So why is it negative? You can obviously like speculate on all of these different things, but why? So the size of negativity is also decreasing with price, because let's say even the same amount of HEX is coming out, the dollar value of that HEX that is coming out is less and less if the price is dropping. And if there is continuous amount of staking, which there is a core group of people who are staking, at one point it can flip if there's a consistent demand of staking, which we still can see in the data. So the lower the price is, the easier it is to flip this chart. And I think it is crucial. So before I tell you the exact understanding of the swaying theory of HEX, let me just like click to view on a monthly basis, just to make it more granular for you to see how it looks on a monthly basis. Very similar, just more fine. As you can see, the main theme is the same thing. You could draw a line here from here to here to here. It's like higher lows almost. I think this is one of, if not the strongest indicator for price, because the swaying theory of HEX is the following. If the staking yield that HEX gives you with the expectation of the yield from the value appreciation is higher than the price inflation of goods and services, then price has to go up. On the other side, if the yield that you get from HEX staking added to the expected yield, that can be negative, added the expected yield of the return from the market valuation in that same period of time, if that is lower than the price inflation of goods and services, then you see a decline. So that's kind of like a mouthful. I have to refine, I think, but the core understanding is that, and also with that, the with that, when you have the first case, when you think that the yield with staking and the expected valuation is getting higher in price, if that is true, then you are staking as well, or more people are staking, and you see an inflow, a net inflow into staking. And if the expected kind of return with the staking yield is minus, like, to goods and services, then you see a net outflow of staking and a price depreciation with it. So if this theory is correct, the data is currently backing it up quite well. If this theory is correct, it means that to see higher prices in HEX, we need a positive net flow of staking. Because a positive net flow of staking means that the people expect the price appreciation with the yield to outpace, the increase in prices of goods and services, which means that staking and using HEX is good for preservation of store of value. And the swaying theory of HEX is exactly applying to my kind of token invention that I had recently, which was Sway, which is on swaysavings.com. It is HEX inspired and has kind of the same mechanism of like where you can stake. It's just called saving, and the yield is adjusting to the market. And so the swaying theory of HEX is really explaining economically of how you can interpret and where you can see the HEX price going. Obviously, if we all of a sudden have a big surge in demand of HEX staking, then all of a sudden we would see net flows into staking. But why do we see negative outflows? I mean, the theory itself doesn't explain that, because that explains how the supply is increasing or decreasing, and currently the user circulating supply is continuously increasing because there are these net outflows. That is due to many different reasons. One, which is quite understood, is that Pulse Chain basically disrupted this whole thing, where the people had other things to do, other things to pursue, and which are competing with HEX, so they did not just stake HEX. And all of those people who joined those coins like Pulse and PulseX were really getting coins at a price on top of the bull market, so they did not come to really understand all of these mechanisms, and they didn't really come for HEX, but they came for other reasons. And those people's coins got tangled with the liquidity of HEX, and it dragged down HEX. So this is something that we discussed in some other like podcasts that I have been onto, and some other streams. Fast forward to the current situation, the economic situation got really hard due to price inflation, which the central banks tackled with rising interest rates. And what rising interest rates do is they suck out the money from everywhere, and the money gets a price. I'm talking here about fiat money that makes credits more expensive. So, there's no free money for companies. So they have to get higher returns on things. They have to lower their cost basis. That's why they kind of fired so many people. And the central bank really wants to kind of make the fiat currency in itself more valuable so that inflation doesn't happen anymore. And inflation was kind of defeated. So the central banks are looking actually back into monetary easing and get the interest rates down, which makes banks give them an opportunity to lower the rates on loans and credits. Then investors are seeking opportunities with higher yields. Then investment starts. The bigger companies get bigger amounts of monies to invest, and at one point there are more startups getting like investment money. And at one point, when the companies are seeking yield elsewhere than in, just by cutting costs and save it in a savings account, in treasuries. When that happens, at one point the companies start paying bigger salaries. So the retail market is getting the money at the last point. So we are in an economic situation where all of these things start to happen, but the general population did not really receive those salary bumps. We're still on the level where it's more restricted. Salaries are not increased. A lot of people got fired, and it's really hard to get a job on a job market. That's what I'm seeing. But the investment money is starting to get already back in because interest rates got lower, and the expectation of interest rates that they will get lower is in place. That is just the economic situation to understand of that the demand for savings, especially on a retail basis, is diminished. And if there's less demand to save the higher costs for goods and services, it means that there's less demand for staking HEX or saving Sway. Sway works the same way. It's really great and goes hand in hand with HEX and the swaying theory of HEX. Why sway? Because why swaying theory? Because it is really moving back and forth, and it can flip. Like HEX staking net flow can flip, right? Under certain conditions, and it will happen. And we will observe it in the data. And if you follow me, we will observe it at one point. And if I'm correct, then we will see higher prices again from that point. Yes, this is something to consider. So you always have to check. I mean, imagine if the same amount of HEX is staked, but the price is much lower. Then, we are much closer to flipping the negative net flow to a positive one. And what if all the buy pressure that is happening buys even more HEX, and the same dollar value that is used to buy the HEX is taking the HEX? Then the lower the price is, the higher the positive flows are into staking. I know it's a mouthful, and I'm going fast forward on this whole topic. But I want you to have a condensed video to understand that. What, for example, has a positive net flow into staking is swaysavings.com, because like I designed it, it's really small. It only has like 80 people. This is not a pitch or anything, but it's kind of so small. And if Sway is working kind of the same way like Hex, it should kind of reconfirm this theory. And in Sway, because we started from people zero amounts got kind of staked, which we call savings in Sway. So zero amount got saved at the beginning. That's why it can be only positive right now. And what we see is a lot of savings just happened and the price really appreciated. And the interesting thing is that the people who sold, they kept it liquid. And at one point they started selling at a certain price. Because in their mind is, well, I think that the yield that I get for starting a savings plus my expectation of the price is negative. So I rather sell it. So, they sold it. That is liquid. Now it's in a pool on Pools X with PLS. So somebody can pick it up, because with the lower price, maybe the expectation of the new user who wants to buy it, the expectation is, well, I think that the expectation of Sway's value to increase, added the additional yield that I get from the market, is positive from now until next year. Because in Sway, you can start a saving for 1 year. And we can get into all of the depth, but it's just a beautiful design, and it isn't inspired by Hex. Only that Sway is much more simplistic, and it tries to kind of like also show you how Hex can work. We can just have a quick look at that as well. I mean, this is the front end, which you find on swaysavings.com. And here it's just an overview, just a quick overview. And you can see that the locked value that got locked is 20 million Sway. And the circulating supply is kind of 5 million Sway right now. And all of the Sway got just locked up in these 58 days. So if my theory is correct, and people expect the Sway price with the additional yield to be positive compared to the price appreciation of goods and services, then people should buy from the market the rest of the circulating supply and start to save it. Because it would mean that they could make, a yield. And currently, like the prices are very low for Sway. It started with, the market cap started at $200 in total. And now I think it's at 15K. So we saw price appreciation. And the current total circulating supply, the initial one, was 36.9 million. Just for you to understand, like, okay, I see 20 million kind of like locked. I see 5 million. That's 25 million. There is like 11 million or 10 million of Sway that can be still minted by some holders of the L-Hex token, which Hex people got. So yeah, it's a very small thing, but this is kind of trying to validate this theory about Hex as well. And Hex will validate that theory, is already validating through the data, all of that. Yeah, this is kind of the price chart of Sway that happened in these 58 days. And we saw a positive inflow into savings, and overall, it's a positive price appreciation. Every now and then, there was a price drop. Especially at the beginning, we had 70% drop, and then later we had another 70% drop, and right now we have a 93% drop. Somebody who hold a lot of liquid at one point decided, well, I'm getting out. Who is, by the way, completely out, as I saw. Back to HEX. This chart is the most important chart for you to understand the swaying theory of HEX. Because once this flips on a continuously, because every now and then we see like a month where it's positive, so it's much better to aggregate all the data on a quarterly basis, because then we can see that it's very rare that a quarter has a positive net flow. And so with all of this, we can most likely expect still a price decline, unfortunately, if I'm correct with the theory. But there are many good holders and stakers, which are regularly staking, like, me included. And so there is demand for staking. And at one point, at lower prices, maybe mine and your economic energy in dollar value might be enough to flip everything, and that more HEX is getting staked at one point than is getting unstaked. Currently, my economic energy and your economic energy is not enough. It's just not enough. And there were speculations that there might be some other economic energy coming in to flip it into positivity. But I think recently everybody understood that you cannot expect somebody to just do it. We just have to see it in the data happening. And until we don't see it happening, you can speculate a lot, this flipping, but if it's not flipping, I just got this concept of the flippening in my head, which people kind of like came up with to express when the Ethereum market cap flips the Bitcoin market cap, and it just invited my head. But yeah, so that has to happen for us to see higher prices, and I think at one point it will do just by design. It only happened to be that there were so many disruptions along the way, one after the other. As explained, all this, what you can do right now is to try to get, have a positive income compared to your cost. Because it means that you have extra money that you can kind of save. Once you're in that position, you can look and at one point see, oh, the price is really steep enough. Oh, actually, the price went down, but the net flow is flipping because there's just some other hexicans who kind of pick up all of this hex and stake it out for a long time. And that's maybe the time when you can get in. Yeah. I'm also open to receive all sorts of criticisms about this theory. It's an interesting time in the crypto markets because many things happened differently this year and last year than we used to get. We just got a really interesting upgrade in Ethereum, the Fusaka upgrade, where I found to be very interesting that the Ethereum community rolled out this kind of peer DAS which makes layer 2s more scalable, which is a technology that could be used in layer 1 to scale layer 1. But they kind of want to test it on layer 2. So they treat layer 2s as a testing ground for future upgrades into layer 1. Because, I mean, it's quite of a risk, obviously, because things can go wrong. And they don't want to have it in layer 1 for now. So it's almost like, the pulse chain community kind of says, well, Ethereum is a testing ground for pulse chain because pulse chain doesn't do upgrades like that often. And it seems like that the Ethereum community is doing something similar where they look at the layer 2, they give them all sorts of features very cheaply, and they look, what are you doing? Is it kind of working, the technology? Is it attackable? And then they will use the technology later on. So found that to be very interesting overall. Looking forward to all of these upgrades to see. Ethereum is quite robust, as we see. Some clients don't work, they have problems with this upgrade. But because we have such a high client diversity in Ethereum, Ethereum is not down. And it's really nice that Pulse Chain also has a client diversity. So it has 2 implementations of the consensus client and 2 implementation of the execution client. So it has client diversity, not like Solana. That's why Solana goes often down. Not as much anymore, but still goes down, and client diversity can help, which is very nicely observable in Ethereum right now. So this is something that is really interesting happening. Maybe you want to comment on ProveX. I think that ProveX is really a great idea. It is also great to have a token associated to it. And this is what Richard is really good at, thinking about economical models. You might think, oh, but why did then Pulse Chain behave that badly? I mean, everybody makes kind of mistakes. I think it was obvious to some degree that people who get into Pulse Chain and into Pulse X at the top of those prices, that they are not coming for like the mathematical beauty and the innovation that happened with HEX. They're coming for, this is successful, I want to get in because next thing has to be successful. So those people mostly are not of the same quality. And there's overlapping things. There's just like people who understand, this is cool, this is also cool. I want to be in both. But what is important to understand is that when there's some level of economic energy being sacrificed, when it happens on the top of high prices and a lot of people come just for the success, that is not something that is sustainable. But when there is harsh conditions where you have to be income positive to be able to kind of afford to sacrifice economic energy, that's when it's interesting to actually sacrifice economic energy, because a different pool of people are doing that. And you don't get those people who just come for the success. They come for the understanding of what this thing is about. This is food for thought. This is nothing to kind of tell you what to do and what not to do, right? As of HEX, there was kind of a different thing, because there was no sacrificing of anything. You got the thing if you wanted to interact with it. So there was a smart contract. You either interacted with it as you understood what it was capable of or not. And at the very beginning, because all of the economic modeling, I think, there was a positivity to the net flow of staking, as we can see in the data. And that's why, with the expectation that should be more valuable in the future, all of those kind of like economic energy went into staking HEX, and that's why it followed the price appreciation. Maybe pushed to some degree with the expectation that there will be other things coming that should benefit. But those expectations come usually from already a validated price appreciation, value appreciation, which happened, I think, due to the swaying theory of HEX. So let me know what you think about this theory, because it's one of the theories that was bugging me for the last 6 years, and I'm happy to share it with you on this, not exactly on a birthday. This video will come out later on, but with kind of the 6th anniversary, the 6th year of HEX. And will stay really interesting, and HEX is here to stay. I mean, you can't kill it. And at one point, the net flow will flip. I'm sure about that. The flippening, or the stakening. How should we call it? I don't know. You let me know. All right. It was a pleasure to talk. I actually wanted to be on RH Max's show. Couldn't make it. Too much stuff happening. Like too much work for me at other places. And also trying to keep you up, with information. So I thought I shared this video with you all. Have a great day. Have a great rest of the year. And see you very soon. And keep being staked. Restake it if you expect the price to increase. If you don't, then maybe, I don't know, do whatever you want. I'm out, and stake it till you make it.